Good day, fellow investors. Is Berkshire a stock to buy now for you? Is Berkshire a business that you should own now? That depends on how Berkshire's valuation fits your portfolio, your return requirements, and that's what we are going to do today. So if you like such valuations, smash that like button and subscribe to this stock market value investing channel. In addition, we're going to discuss something beautiful, and I'm going to start with that, and that is Berkshire press release for the second quarter. The most beautiful I have ever seen. If you go to Berkshire, to the news release of second quarter earnings, there it is. So this is what Warren Buffett says about the earnings, no conference calls. Of course, there is the longer formal version, but this is it. And that is less than 2 pages. And if it wasn't for the shenanigan accounting that they have to show because of regulation, and that is that the amount of investment gain losses in any given quarter is usually meaningless and delivers figures for net earnings per share that can be extremely misleading to investors who have little or no knowledge of accounting. Without that part, it would be even 1 page. So just let me explain the accounting part. Net earnings are 28 billion for the second quarter, and that is because stocks went up. They have to show from the last day of the previous quarter to the last day of this quarter how their stock market portfolio went. And that is what Warren Buffett calls meaningless, but that impacts reported earnings. But these are the real earnings. The rest is stock prices going up and down. Nevertheless, we focus on real earnings. These are the operating earnings, 6.6 billion. We are at 13.7 for the first 6 months. That should be, with a better third and fourth quarters, about $28 billion made for Berkshire. There is 6 billion used to repurchasing, so they are doing that 12 billion, which is a way to return cash to shareholders. And that's all you need to know about investing in Berkshire. The rest is as usual. Just an addition here, as I made this also for my research platform, 14 billion here times 2 for the year. We are at 28 billion. And then we have again the hidden earnings, because we have the stock market portfolio of Berkshire and only the dividends are accounted here in insurance investment income. Only the dividends are accounted, not the earnings that those businesses that Berkshire owns in part. So those are hidden earnings, and I have calculated in a previous video that it is about 8 billion. So per year, 28 from operating earnings plus 8 billion from hidden earnings. I always stick to my valuation that Berkshire gives us 36 billion of value per year in a normal environment. If I put that into my valuation table, then Berkshire is a little bit overvalued for a long-term return of 10%, so it's giving now around 6, 7, likely 8%, which is still a great return, which is still Berkshire. You have focus on American economy, a fortress of a balance sheet, will not go bankrupt. If there is a crisis, he will deploy the money and even increase that long-term return. He will take advantage of the crisis. So if you want an investment that is a sleep well at night investment, then look no further than Berkshire, but be happy with 7, 8, perhaps 9, 10% investment return. Let's do the valuation. So we did Facebook yesterday. If we check again the publicly traded stock chart, here is the valuation of Berkshire. 36 billion is the created value or the cash flows, and growth rate, now they are doing 24 billion of buybacks, which is approximately 5% buyback yield. So plus the earnings growth, the everything, I should put this to 8% growth per year in a normal environment which pushes the intrinsic value higher, in an inflationary environment, an investment or something, that this could go to 10, revalued by the market. So that would be, let's say, an increased value, and I will leave the worst case scenario. Let's compare it now to the current situation with Berkshire. There we are for, let's say, a 9% return. Of course, anything can happen. There could be crisis, insurance crisis, etc. But we are there with a 9% return, which is still a lot better than the S&P 500, and you can check the valuation also of that based on dividends and a 2% dividend yield ahead. But there is always better. I think Alibaba is likely better now, Facebook is likely better, and there are a few more stocks that you can check on my stock market research platform that I think are better investments now than Berkshire. However, Berkshire is Berkshire. Many make it a pillar of their portfolio. I owned it, then I did some portfolio reshuffling, so I sold. But if something happens in the next year or down the road this decade, I am sure that when this, based on my long-term preferences, reaches 1, when the ratio there for a 10% return on my table reaches 1, I'm sure I'll really consider going back into Berkshire. This is a great return for, I think, 95% of the population there. So really consider it for your portfolio. If someone would ask me, is Berkshire a buy, I would say definitely yes, almost always. So thanks for watching. Subscribe for Berkshire-like videos, no mumbo jumbo, no discussions, 1-2 pages to the core. This is what you need to know for investing. And I'll see you in the next video about deflation, that I got a lot of questions, so let me answer that in the mid of the week. Thanks for watching. Smash that like button. See ya.